Welcome to the latest Motley Fool scoreboard. I'm on in Chalk Pool, and we've got longtime fools Jason Hall and Dan Kaplinger giving a 1 to 10 rating to a top 200 stock in the primary Hidden Gems database. It's Doximity, ticker symbol DOCS. Rate the strength of Doximity's business first, including factors like industry and competition. 10's invincible, 1 is hopeless. Dan's at a 5. Jason, you're at a 6.
Yeah, honestly, I'm probably rating it too conservatively here. It's easy with recency bias to say AI is a huge threat, and it may be, but for me, that 6 is really more about addressable market and what can drive future growth. We're seeing growth really slow. But the trends broadly around things like margin expansion are still really positive, probably not giving them enough credit for that. I think the threat of AI is really around falling costs of competitive entry. AI tools are making it easy to quickly build and stand up competing products. We do have some stickiness here with the network effect and some proprietary data. Are those going to be enough to stave off the risks of disruption? Can management adapt and innovate? That's really the questions that I have.
Yeah, Jason's nailed it right here. Digital management systems that are tailored to the medical community, they clearly have value. They make medical offices run better. They make doctors more efficient. It's good for patients. But really the big question here is just, okay, yeah, Doximity got out of the gate first. It's put together a really good platform, but can it defend itself against AI innovation? Will doctors be sort of like, hey, why should I pay these guys when I can just get the next new big thing? Medical professionals often prone to, try to be first adopters with that kind of evolution. And so that, I think, is the question that's still outstanding. It's why I have some doubts about Doximity's staying power going forward.
Bonus points to each of you for not saying the LinkedIn of for doctors. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you have 7s, Jason.
Yeah, you know what the LinkedIn for doctors is?
LinkedIn.
It's LinkedIn. Yeah. All right. Yeah. So fair score of 7, I think, for me and Dan both. Now that's despite the fact the stock is down 58% since going public. It was 2021. We loved everything tech and SaaS back then. So I'm grading management on things that they have more direct influence on. Revenue's up almost 4x, and free cash flow is up more than 550% since that IPO. Management, you grade them on things they can control, and they've certainly grown the business and delivered value for shareholders, even though the stock price is down.
Yeah, and I also think that having the co-founder stay on as the CEO is a positive for Doximity. Tangney has his finger on the pulse of the industry. He's got a chance now as new opportunities arise. He should be able to kind of navigate the company towards them more effectively, as long as those opportunities do in fact arise. And that doubt is still there, but I do think that they've got the right person at the helm to figure out what is available and to take advantage of it.
For financials, a 10 is a fortress, a 1 is yikes. We've got a pair of 8s, Jason.
Yeah, I know Dan and I are just doing a lot of here, mutual agreement. But I mean, I think for good reason. This is exactly like what you want to see from like a software as a service business with network effect. Balance sheet is stellar. The margins are generally heading in the right direction. Dan will talk about what happened last quarter that kind of scared the market. The other thing too, the stock, the count, shares outstanding peaked in 2023. It's shrinking since then, and that's love to see that. Love to see that.
Yeah, Jason started out on this talking about how Doximity's business actually looks pretty healthy, and that shows up in the financials. Yeah, sure. We had a panic, as we always do with these high growth stocks. As soon as they hit any kind of margin decline, even if it's short term in nature, you see a big stock decline. But look, Doximity's got a strong balance sheet. It's got good positive cash flow. It's still seeing continued growth. That is encouraging. We want to make sure that we keep seeing that going forward indefinitely.
Dan, let's talk valuation. How well will Doximity's stock do over the next 5 years? And how safe is it? 10's a sure thing, 1's a lottery ticket.
So I'm going 5 to 10%. I've got a safety score of 7. I think that Doximity is in a pretty good position to keep thriving as a business. Its stock has declined substantially, and so I think there's room for that share price to recover. Again, the one thing it has to do, it has to prove its ability to keep adopting and integrating new AI-powered tools into the platform. It cannot afford to cede that competitive advantage to any disruptive would-be competitors That would be the death knell for this company. Needs to stay ahead and stay in the leadership position.
I'm a little more optimistic, but also binary in my expectations. I think this could be a 10 to 15% gainer and potentially doing better than the market. But my safety score is a 6. Look at the valuation, 14 times free cash flow, 18 times earning. That's cheap for a company that's growing at double-digit rates. But we're seeing growth starting to decelerate a little bit. And we just can't ignore the concerns about technological disruption. The moats in tech and software, if they even exist, are shallow. And again, it's just not clear to me the Doximity has enough strength in its network effect, and whether the proprietary data that has is strong enough to stave off competitive threats. So I think there's a good chance it does very, very well, but there's also the risk that investors do lose money.
Thanks to Jason and Dan. They've given Doximity an okay overall score of 6.5 out of 10. Neither has a top it, though. It's kind of strong in its niche. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Costco. Till then, Fool on.
You know, under prior management, it actually could be the LinkedIn for doctors, meaning that Microsoft could have overpaid to buy it.